the Smashi Business Show. I'm Richard Fitzgerald.
I'm Walid Shihabi.
Nice to see you again, Walid. This is, what day of the week is it? Wednesday, the 26th of June, 2024. We're back with another episode of Smashi Business. Today we'll be talking about, Saudi is on the agenda a lot these days, the construction industry, Vision 2030, the cost of it. It could cost 1.3 trillion in construction alone, but the Saudi construction sector is set to lead global market with $181.5 billion growth. So that's a key Saudi story. Another thing that's often talked about in the emergence and re-emergence of the Saudi economy is Program HQ, with regional companies having their headquarters over there. There was a big announcement by EY yesterday, and we'll talk about that. And then lastly, NVIDIA, which for all its stories so far, this AI chip story and the stock market and the rise of NVIDIA to the most valuable company in the world, hasn't really had a regional story. And now we have one, so we're going to talk about that. It's to do with Ooredoo, it's to do with Qatar. But good morning, how are you?
I'm great, it's good to be back. It's been a while.
Yeah, and you and I haven't been on like for like, mano mano, chatting on the show, so it's good.
Because you spend so much time in Egypt these days, Richard. You seem to like it a lot over there.
Personal and business. No, I like it. You know, and the region is very exciting and everything like that. But no, we were talking because since we spoke last, RealKeeper, your day job, the PropTech app announced funding, and I was just asking you about it, and you kind of said that the attention, PR works, the attention you got. So how have you kind of dealt with that since the announcement?
It's been brilliant, and I think for us, obviously, customer attention, etc., is always very, very welcome. But it was also strategic and ecosystem players' attention. Including from regulators, including conversations about, you know, how to sandbox the solution and scale it, the one that we're introducing, because it does solve a problem that regulators recognize exists in the housing market over here. So it's been absolutely brilliant. But like I told you, it's also, where do you put your attention? Where's the lowest hanging fruit, and how much time do you commit to all these opportunities that pop up when, you know, you're a little bit more visible, you're a little bit out there, more out there, and probably have a little bit more money to spend also from the fundraise. So that's been keeping me busy. I'm glad you mentioned the day and the month, because I have no idea. But I can't complain. It's been pretty awesome.
That's good. It sounds like really busy, but it's positive growth. You're going in the right direction. And we talked yesterday, Farha and I, about the property sector. It continues to grow. That's a hot topic.
Absolutely. I think there was a Bloomberg article. You guys also talked about that a little bit. In that, if you've been in Dubai real estate market as long as I have, you acknowledge that it's a boom and bust cycle market. It happened quite a few times, and if you compare it to a little bit more mature markets, they tend to have good years and bad years, but they're not as big an oscillation, right, between the two. And their take on it is that we might be starting to exit that boom and bust cycle, that not after every couple of strong years do you have to have a crash, right? It doesn't have to be that way, especially if the majority of the demand you're seeing is actually sustainable, is actually less speculative, etc. And there might be some truth to that. We're not seeing too many signs of a cool off in the market price-wise. Maybe days on market for some stock takes a little bit longer in some categories. Maybe there is a little bit more supply coming into the market that takes some time to be absorbed, but it hasn't caused a shift yet, and it is good to see.
It's good to see. I mean, famous last words. Like usually when a bubble is about to burst, you kind of say. But I do agree with you, and I think it is maturity, right? We talked also yesterday about inflation being relatively low. And lots of things like corporate tax, lots of things here is showing the signs of what a more mature economic country and setup is, and that crosses sectors, whether it's advertising sector. And there was something in the US that came up. An ex-presidential candidate bought a media company, and he said in the interview with Semaphore with Ben Smith, and he basically said, in the private markets, there are two things that matter: finance and communications. And finance is property, and communications is media, storytelling, everything like that, marketing, advertising. And he did his first business in finance property, and now he's trying to buy BuzzFeed. And it's a simplistic way of looking at it, but when you think of how this region is built, and nice little segue into the construction in Saudi, we look at that and we go, okay, construction. So what is construction? And people's brains will go in certain areas. Is it developers? But actually, it's finance, right? Like, where's the capital needed? So I think it's an interesting way to look at the robustness of the economies. And yeah, I think like the 30-40% or whatever numbers they are, property growth, rental growth, whatever, isn't sustainable. But maybe 2, 3, 5, 10% growth is sustainable.
And by the way, I don't necessarily mean when I say this that the market will continue to go up permanently, but the cycles and the extremeness of the cycles probably will be a little bit more manageable.
But we're in an extreme cycle at the moment.
We're in fairness, by the way, in the vast majority of neighborhoods in Dubai, we're back to 2014 levels, which was the previous peak.
Yeah.
And anybody who spent the last 3 or 4 years here will find that, wow, okay, the market really had a big ramp up. But if you extend that cycle to around 10 to 15 years' time, you'll find out that actually, no, we've just made up, in the vast majority of neighborhoods, we've made up for a decline that was witnessed between 2015 and 2020.
But the point is that we went up fast.
Yes.
Yeah.
Yes, the recovery was fast. It was over a short period of time. It was driven to a large degree by capital inflows and people inflows, so the population grew significantly over there. So I would argue that there was a real reason for that. Occupancy rates show it, demand levels continuously on housing, like where people rent and where people live and where they're buying to move in, has been the primary driver and is a supporting factor in the equation.
And it sustained itself in a period of high inflation and high interest rates.
High inflation, high interest rates. So very counter-cyclical, very counterintuitive, sorry, when you look at it, because the same factors did have a negative impact on many other real estate markets. And it makes sense. Your mortgage is going to be more expensive. The alternative return on putting your money in the bank is also now higher. So buy property, get X% return on rents, or put it in the bank, very possibly
you
safer.
can get the same yield from a sukuk as you can from property at the
Potentially,
moment.
you can get higher yields if you go a little bit up the risk parameters on a sukuk or a bond or so on. But it's not property, and property there's also an emotional association to physical asset, and there's capital gains prospects also in that are priced in.
But just while we have you on, and it's a bit of an extended conversation, it wasn't planned, but what's your assessment then on someone who's been in a startup or running a business that's raised funds in this time? What do you think investors are making decisions on? Because if you can make more money at the moment, if property is going up and bonds, then is it dry out there for startups? And will that change?
Yes, and if you've raised money in the last year and a half as a startup, very well done. It's not been easy. And it's not been easy, but very simply because alternative asset classes have higher returns today. Lower risk asset classes have higher returns today than they did a couple of years ago. So when somebody is investing in you, their expectation of a return now is higher, right? So you need to make up for the risk-free rate, what we call the risk-free rate, and then the risk of a startup, which is significant, right? It's very binary results usually in startups. You either do very well or you don't survive. So that risk capital probably is harder to come by today. But we had a little bit of an advantage in the region over here, is that there were pools of capital that are allocated to this asset class regardless of interest rates, regardless of economic activity, etc., because they're strategic in nature. You look at Saudi Arabia.
The funds were there to be deployed.
And they should be deployed, and people are assessed by how quickly they deploy these funds because they have a strategic angle to them. Some specific in specific sectors and startups, like it might be a strategy for a country or an area to pump money into AI development, right? So that money will have to be deployed. So these people will have an opportunity to get funding if they have a good product. But on the private side, it's been okay, but it's nowhere near as the wide participation level that we saw, for example, 2021 and 2022.
Yeah.
But the ecosystem is doing better. There is an uptick on fundraising in the UAE, for example. In the last quarter, we saw Magnet release a little bit the results for second quarter, and there is, we're starting to see a recovery of deployment. There were, you mentioned a lot of the announcements of fundraisers during that period, so it was quite healthy, quite diversified. There wasn't like one superstar startup that got all the funding. It was actually pretty well.
And not one sector either.
And not one sector, although PropTech did great.
Yeah, for a long time we talk about fintech, but PropTech is buzzy. Like not only yourselves, Keeper, that there was Stake and there's a few others, but also that headline unicorn status that Property Finder had and things like that. It's all momentum building.
Critical.
Yeah.
One of the most important things in a startup ecosystem is exits and exit history and exit track record. And what that means is, great, you can have these great funding rounds coming in, but there's no money going out to the investors to actually solidify their returns from these funding rounds. What you want to see on the other side of that is people getting their money back multiple times over. And that's what, for example, the VC that went into Property Finder a few years later, I don't know what the X number is, but it's probably 4 and 5, Beko, 4 and 5X what was originally put in. So this is a great end result for an investment in a company that grew in value. So these exits, IPOs, trade sales, acquisitions, mergers, etc. Secondary, what happened in Property Finder is what we consider a secondary. So they didn't IPO, they weren't bought out by anybody. It was the company itself that got into profitability that went and bought back from its shareholders at a fair value, which is
cash injection
optimal
from another entity.
Another entity that was willing to fund them because they're profitable, because they're in good financial condition, and they can borrow at reasonable rates.
It's good analysis. It's a good story. We could continue this, but we do have some topics to talk. But I love it because I relate it to the media sector, and I think we're missing that. I made some point lately about leakage, the $6.2 billion of advertising that's leaving the industry. I won't labor on it now, but we're in an era now where we don't have success stories. Like the old leaders that built the media industry, those companies aren't led in the same way now. And then on the advertising side, it's the same. So the publishing side and broadcasters aren't there in the region, and the advertising side aren't there in the region. They're all bought up by global, and we just don't have that. So there's a big issue there. I
think there's a few interesting stories, though, underneath that. Probably I would highlight. I think that the recent article by one of the co-founders of Anghami on the merger with OSN and how they immediately got engaged into recreating that platform of the OSN Plus. I think that transaction was very, very positive.
Absolutely.
And the idea of it is transition, that one of the leaders in streaming from using third-party technology to using their own technology via the merger with Anghami. Who is a successful private listed startup in media, in streaming, in music industry in the Middle East, which is certainly worth highlighting. And then
loss-making, went public at 220, we're 30 now.
They're worth a little bit more now, actually. I follow it very, very closely. It's not unlike other companies that went public during the same time in the technology sector via SPAC. So it wasn't particularly.
No, I don't mean to be Greg. We did cover that yesterday. The OSN Plus, they were licensing both HBO on the content side and the technology lately from Comcast, and the 220 or so engineers that built. I remember Eddie told us here that he's built the smart TV apps, but it doesn't work for music. So it's been brilliant. The strategic synergy is amazing. Yeah.
Indeed.
Yeah. So no, I think I think the comparison is that in property now we're having the prop tech, but before we had the developers. So imagine being in this region and imagine not having an EMAR or others in other countries. Imagine it being in San Francisco.
Yeah.
That's the equivalent. And in the travel industry, travel and tourism, imagine we're all flying on United Airways or British Airways. We're not. And I think, like, for me, that's the strongest point. When you've got an Emirates, when you've got an EMAR, I don't have that in media.
Major
and
enablers.
Angami, with all due respect, was only ever worth 200 million. Spotify capped at 80 billion.
Yes.
There's a difference.
Yes, of course.
And until we have that here, either here or globally, we have a problem.
That's very true, and you have to confirm that the existence of sort of national champions like Emaar Properties or Emirates Airlines, etc., create that ecosystem.
And people take it for granted, but it's so important.
It's critical.
Yeah,
absolutely.
And that's why I'm not, as a modern media company, that's why we're not always trying to disrupt. We respect legacy incumbent because you need it. You need it for jobs, you need it for reputation, you need it for investment and everything like that.
You need it to have the industry rooted in the in your country. Absolutely.
68.7 million Angami, I'm sorry. Just half your valuation.
That's significantly higher than 30, right?
Yeah, well, let's see. I'm still down my investments. But, okay, jumping into Saudi. So we segued a lot there, but it's always good to chat. Okay, so basically the headline story is Vision 2030 could cost Saudi 1.3 trillion in construction alone, the giga projects. These stories about NEOM, about having to go for funds elsewhere. Is that a problem? Is that harming the vision?
I think construction cost was always going to be something that is going to be the biggest challenge for doing what is needed in an economy and a country the size of the kingdom, for sure. But I think it's not surprising, the numbers that you mentioned, and it's not just purely giga projects. What's happening in Saudi Arabia is that the private sector also has a big role to play. There's housing stock that needs to come in to match a young growing population such as that in Saudi Arabia in multiple geographies in Saudi. Saudi is not a small country with a concentrated population base. It's actually quite spread out across multiple areas. The transportation infrastructure needed to connect it together in sort of the 21st century. So it's a private and the public spending that is actually going hand in hand in getting these numbers. But I would argue it's very much needed to achieve the vision of modernizing the economy. For a modern economy, you need a modern infrastructure, you need a modern transportation, you need modern habitation, you need modern offices and office infrastructure. If you're moving all the headquarters of companies over here and they're employing and so on. So there's no surprise there, but what it does do also is inflate the cost of construction, right? Because you only have so much capacity built into the system.
Another article last week said it's on Smashi Business said it's the highest at the moment.
It is the highest in the world. Yeah.
But going back to the
in the region.
In the region, and going back to by far in the region, yeah, which is interesting compared with UAE. But going back to the point earlier about the link between construction and finance, and Saudi was higher, the most bonds and sukuks issued in Saudi, more than China, that was perennially higher. So the other thing, Walid, is these stories, and even by us, it sounds like it's a bad thing. It sounds like the cost is a lot, but we're talking about something other than oil, so it's good, right?
Absolutely, and it's infrastructure, and it's an investment that pays off over a long period of time. You saw it. You saw it in a place like Dubai, where the very significant investment in infrastructure and capacity of the airport, for example, capacity of the port, the road network. That is a massive infrastructure investment that needs significant financing, but what that gets on the back end is all that new business, all that new capacity, all those visitors, all those people moving in, all those goods coming through. So it's a core needed investment. And Saudi Arabia is still a good place when it comes to public debt. Right, it's not particularly high. Oil prices have helped for a period of time. Naturally, there needs to be some logic and sense to the amount of spending and prioritizing where that spending goes, rather than across the board. And I think what we're seeing is a little bit more of that focus on the spending where it has the highest impact.
Do you think there's a risk that over time, to reach these targets, that there's a risk of going down, getting the country in more debt?
I think it's not necessarily a bad thing to tap the debt market over a period of time. It is obviously more costly when interest rates are higher, but I think the fundamentals of the Saudi economy still support a ability to go higher on the debt side. So I don't see it as an absolute negative, but I see it as something that needs to be managed, obviously.
And to your point, the private sector is to reach 180 billion. The construction sector totally, they're going to make 660,000 new homes by 2030. So there's a whole thing going on there. There's even Egyptian developers are moving into Saudi.
Absolutely.
And here as well.
Absolutely. There's a major opportunity. It's not been fully tapped into yet. I would say it's in its nascent phase of private developers tapping into the Saudi market in an effective way. It has also required a little bit of a relook on the basic regulations around private development and construction, about sales to international investors and residents and non-Saudis. But I see this as one of the largest untapped potentials in the Saudi economy, which is the private development of property.
Keeper Saudi?
Definitely. 2025 probably is when we are going to have like people on the ground, but we've been doing a lot of preliminary work in terms of understanding the market and the requirement. A lot of the key pain points that we have over here are shared in Saudi Arabia, but also where we see a lot of opportunity in Saudi Arabia is that private development market also coming on strong, where it isn't anywhere near the level that you find, for example, in the UAE.
Yeah, and another company has announced that they're moving there is EY, Ernst & Young.
Major news.
Yeah, big news. So it's known as the Program HQ, and the new headquarters will be situated at KAFT, King Abdullah Financial District, which has been a big investment, and a lot of people are being based there. So we're told that it's going to run 15 offices across the region, 15 branches. It's a holding company that will support 8,000 staff, but they are moving their headquarters there. So that's an interesting development for Riyadh.
Absolutely, and that's one of the key programs I think that Saudi Arabia came up with in order to attract talent, in order to become, a very relevant base, not just for Saudi, for the broader Saudi Arabia, but for the region as a whole, being the largest economy in the region. So it's a legitimate ambition for sure, and attracting one of the big four. I don't know the numbers internally in terms of the Middle East, in terms of the billing or the booking revenue by EY in Saudi Arabia versus the rest of the Middle East, but I have a very strong, expectation that the majority or the largest country that they bill for is Saudi Arabia in terms of their consulting and their auditing functions. So it makes sense. What somebody like EY would need before making a commitment like that, obviously, is some sort of commitment on, the services available for the staff and and obviously the infrastructure for them to be there. Cost of living cannot be higher than where they're, or has to be manageable in some way. Availability of accommodation has to be available. So there's probably some things you need to do as you build into that, but this is obviously major news.
Major, yeah, exactly. But anyone who's worked in the region will be familiar with how the consultants operate from Dubai and go back and forth on those planes to Riyadh. So the fact that they're going to have more and more people who aren't doing that is a change in the what would we say, in the workplace environment in the region. It's fascinating, really, what's happening, I guess, overall.
Absolutely, very interesting to watch. I think Riyadh can be a very legitimate regional financial center with the existence of headquarters for entities like EY. And remember, when you create the ecosystem, good things happen. Right? So you have people, the employees that leave EY and start their own things within the financial space and so on. So it just builds up into a broader ecosystem just by putting people in that industry, high-level people in that industry together in the same space. generally creates a very positive
and just for people
leverage
listening who haven't had to look into this in detail, and it's not a Dubai versus, like, we saw this headline yesterday and we thought there was 3,000 staff moving from Dubai to Riyadh, but we're not going with that story. We're not confirming it, because when we looked into it as Augustus Media, our structure is under Abu Dhabi Global Market, and we have 100% owned franchises in Riyadh and Dubai. And after the initial announcement a few years ago about this, the nuance is you set up another company. So you have two licenses in Saudi. One is like a SPV or special holding purpose vehicle, and it's for branches. So it's non-commercial. And then the commercial entity is in Riyadh that does work with the government, but the non-commercial needs to have minimum 5 branches across the region, and C-suite needs to be there. So it's more like a holding company. And when you and I read this before the show, we sort of picked up on that indirectly, that's what they're doing. So they're having a headquarter that manages a Saudi branch, manages the Dubai branch, and 15 branches across the region. The corporate tax in Saudi at the moment is the leeway on that is 20%. UAE is 9%, Qatar is 10%. Egypt is 22, but you're getting, if you do the 5 branches and you do what they've done, you're getting, I think it was 10 years, I have to double check, for free. So it's
big incentive.
It's a corporate tax thing by having the headquarters, but you have to invest. So you have to have your C-suite there, and you have to actually be there.
I mean, if you're going to invest anywhere, you'd want to invest in the biggest economy in the Middle East, in its heart and its center. So it's definitely a legitimate path. Tax incentives are good, but what's very important is the change of mindset that a posting in Saudi Arabia is a hardship posting, as opposed to one that is actually very positive for growth, and that it allows, lifestyle options, which is a little bit about the social opening up.
People need to get that out of their head, though.
Completely, yes.
It's not a hardship posting, and but actually, like in the last few years, many people know it's not, and many people, but the cost of the salaries and it was lower. And now, I just had a call this morning with someone actually in Riyadh who moved from Jeddah, and he's like, wow, like he grew up in Jeddah, and he's like, no, it's more expensive, way more expensive, to a detriment. He still thinks Jeddah is a great opportunity, but Riyadh is notably more expensive lately, especially since the 15% VAT and things like that. But it's actually, in my layman's percentages, and you can see my numbers aren't great from earlier, but I used to think it was 20-30% less for rent and salary, and now I think it's back on par with Dubai.
I think it is. It's very close to par. I mean, depends on the category you're talking about. Some things are cheaper, some things are more expensive, but on average, from what I could tell from traveling, from expenses, from real estate prices, from what people are renting at, etc. Yeah, we're talking about on par, for sure.
Capital city, 8-9 million people. Like, it's good that we're having another one in the region, I guess.
Absolutely.
Especially when
and potentially more. I mean, you mentioned Jeddah, and Jeddah is on the other side of the peninsula, so there's a huge opportunity over there also on the Red Sea, which is a massive development opportunity across the Red Sea coast for Saudi Arabia. So that's another one, and you cannot grow as a region, as a block, etc., with only a single hub. Right, as it grows, you'll have to develop multiple hubs, as you do in greater consolidations like you have in the US. There's no one single hub. There's a San Francisco, there's a place for New York, there's a place for LA, there's a place for Miami, and there's a place for Houston as hubs for multiple things. There is overlap, but there's also specialization and so on. So I'd hope to see more of that in the region. It can't be just one center, one hub for the whole area.
But right now it's the Gulf, isn't it? It's not Turkey, it's not Egypt, it's not Pakistan, it's the Gulf that's doing well. And our last story is about Qatar, who have partnered, Ooredoo particularly, the largest telco there, and in other countries across the region, have partnered with NVIDIA. So that's a big announcement. NVIDIA is the darling of AI. It's the breakout company. You've got your processing chips that's building these large language models, and everyone's investing in them. They're doing really well. They passed $1 trillion, the most valuable company in the world. They passed out the Metas, the Fangs, and all that. But then they dropped 600 million in a week. But yesterday there was an announcement.
600 billion.
600 billion.
Yeah.
Yeah. 600 billion. It's
we
a
don't
huge
talk about
number.
millions in that context. It's $600 billion in a week. Yes.
In a week. So they went to 3 trillion, and they're probably down at 2.4 billion now. That's crazy. But I'll dig up the story and the detail of it. But what do you think of this move by NVIDIA into Qatar as opposed to other places?
A bit of a first mover. I tried to unpack a little bit the news, and this is ElHadidy is Qatar based, but it's in it operates in 5 countries. It's a telecom and technology platform, obviously, and I think this fits within the sort of platform service provision. You get a partner, so it allows you to distribute services by NVIDIA via your own platform to your corporate business customers, etc. So I think it's a bit of a coup. And a great headline grabber, especially when you're talking about a company that just last month was the most valuable company in the world. So by
fascinating. Yeah, Qatar, Algeria, Tunisia, Oman, and the Maldives, and they're going to use it for hardware and software. They're going to plan to develop an AI-ready platform using NVIDIA's technology. Good to see things happening. Like, people always question what are the different Gulf states doing, what's their strategy, but it's all moving in the right direction. There was a Minister of Technology at the Bloomberg Economic Forum in Qatar talking about AI. He didn't specifically mention NVIDIA. It was, must have been in the works at the time, but you can see this cloud-based innovation happening.
Absolutely. And also, by the way, I'll draw also a parallel with what's happening with telcos in the region. So you've probably seen it with Etisalat, you see it with ElHadidy, you see it with others, that they're transitioning from a telco sort of infrastructure to a services provision technology platform, right? So you have a bouquet of services that you get access to as a customer of Etisalat or EAND in this case, or ElHadidy, or so on. And it's sort of, all of them are in a race to ramp up the value add that they can provide on these platforms. And this is sort of the cutting edge of it, is when you can actually tap into, as a customer of ElHadidy, you can tap into the cutting edge of technology. You can have cloud-based AI services being provided into your business.
Yeah, fascinating. Well, that's all we have time for today. Thanks a lot for your insights, as always.
My pleasure.
And we'll see you, inshallah, next Wednesday as well.
I look forward to it.
Looking forward to it.
Thank you, Richard.